This is Mamuni. Thank you so much for being Amar Baba.
Hi everyone, welcome to my channel. Introduction of optional joint taxation for married couples. Under the current Indian tax system, every individual, irrespective of their marital status, that is married or not, or household income structure, is taxed separately. Everyone has to file their own income tax returns, that is ITR, even if they have shared income or joint expenses. The Institute of Chartered Accountants of India, that is ICAI, has proposed introducing optional joint taxation for married couples in the Union Budget 2026. So, Union Budget 2026 may bring major tax relief for married couples as the Modi government considers introducing optional joint income tax filing. This move could help single income families improve use of exemption deductions and offer surcharge relief. Under the Joint Taxation for Married Couples scheme, a simple income tax calculation involves adding the income of both spouses and then taxed under a separate set of slabs as a single unit, potentially lowering total tax liability compared to separate filing. Such a system can have a double basic exemption limit, that is rupees 8 lakh, consisting of rupees 4 lakh plus rupees 4 lakh per spouse, along with revised tax slabs and rates to benefit single income or unequal income household. Now let's take a look at the new income tax slabs and rates under proposed joint taxation for married couples, which may look as follows based on ICAI proposed for budget 2026, provided the government accepts it. Proposed joint tax slab structure. Under the proposed joint taxation framework, married couples with a total joint income of up to rupees 8 lakh would not be required to pay any income tax. That is, they will pay nil tax or zero tax on annual income up to rupees 8 lakh, because the basic exemption limit under the proposed joint taxation for married couples is rupees 8 lakh, resulting in giving relief to middle class and single income household. And with the married couples combined income exceeds rupees 8 lakh but does not exceed rupees 16 lakh, tax would be levied at the rate of 5%. And joint income between rupees 16 lakh and rupees 24 lakh would attract a tax rate of 10%, and joint income between rupees 24 lakh and rupees 32 lakh would attract a tax rate of 15%, and joint income between rupees 32 lakh and rupees 40 lakh would attract a tax rate of 20%, and joint income between rupees 40 lakh and rupees 48 lakh would attract a tax rate of 25%, and joint income above rupees 48 lakh would attract a tax rate of 30%. Now, let me make you understand with the help of a simple example of joint taxation calculation, which is based on proposed 2026 joint taxation structure. Now, let us assume the income of spouse X is equal to rupees 18 lakhs per annum and the income of spouse Y is equal to rupees 5 lakhs per annum. So, the total joint income or combined gross income is equal to rupees 18 lakhs plus rupees 5 lakhs is equal to rupees 23 lakhs. Now let us deduct standard deduction of rupees 75,000 of spouse A and spouse B, which is equal to rupees 1 lakh 50,000. After deducting the standard deduction of rupees 1 lakh 50,000 from the combined gross income of rupees 23 lakh, the net taxable income combined is equal to rupees 21 lakh 50,000. Now let's do the tax calculation based on proposed joint tax slabs. As we know, under the proposed joint taxation framework, married couples with a total joint income of up to rupees 8 lakh would not be required to pay any income tax or will pay zero tax or nil tax because the basic exemption limit under the proposed joint taxation is rupees 8 lakh of both the spouses. That is, spouse A is equal to rupees 4 lakh and spouse B is equal to rupees 4 lakh also. On the remaining joint income of rupees 16 lakh minus rupees 8 lakh at the rate of 5%, tax would be is equal to rupees 8 lakh into 5% is equal to rupees 40,000. On the remaining joint income, that is rupees 21 lakh 50,000 minus rupees 8 lakh minus rupees 8 lakh, that is rupees 16 lakhs at the rate of 10% is equal to rupees 21 lakh 50,000 minus rupees 16 lakh is equal to rupees 5 lakh 50,000 into 10%. So, tax would be is equal to rupees 55,000. So, the total tax liability is equal to rupees 0 for the first proposed joint tax slab plus rupees 40,000 for the second proposed joint tax slab and rupees 55,000 for the third proposed joint tax slab. So, the total tax is equal to rupees 0 plus rupees 40,000 plus rupees 55,000. Therefore, total tax is equal to rupees 95,000. In this way, we have to do income tax calculation based on proposed joint tax slabs for joint taxation for married couples. Understood? So, we can see joint taxation for married couples is significantly lower than if taxed individually, especially for spouse A whose annual income is rupees 18 lakhs. Key takeaways, benefits. Number 1, total tax savings. The proposed joint taxation system aims to significantly reduce the tax burden compared to separate filing, which would likely place the primary earner in the 30% tax slab, leading to higher tax liabilities. Number 2, optional. Optional joint taxation is expected to be optional, meaning married couples can choose to file separately if that works out to be cheaper. This proposed model is usually suggested as an optional, not mandatory system, allowing married couples to choose the better rate. Both spouses must have valid PAN cards to opt for joint taxation system. Number 4, deductions might still allow separate standard deductions for each salaried spouse. Number 5, current status. As of early 2026, this is a proposal by ICAI for budget 2026 and not yet in effect in India. The ICAI has recommended that under the joint taxation regime, the basic exemption limit should be double and a separate slab structure should be designed based on combined married couples' income. Please note, the joint taxation system for married couples already exists in countries like the USA and Germany. Thank you so much for watching. Thank you so much for your precious time. I sincerely hope this was helpful.